Was first provided by Melissa Dittman Tracey in the Realtor Magazine with the intent to help consumers understand the financial issues that could affect their home purchase. The 5 mortgage trends you need to watch for are: number 1, rising rates. Interest rates below 3% for a 30-year mortgage aren't going to be around forever. Buyers definitely should be taking advantage of this because who knows when we're going to ever see these low rates again. Chief economist of the National Association of Realtors predicts that as early as the end of this year or spring of next year, the same loans will be around 3.5% mark, which is still an incredible rate. But it's a higher rate on the top of the high prices. It may continue pushing buyers out of the market, which we've already seen this year. Number 2 is lending qualifications. Lending standards tightened during the pandemic, and lenders were trying to avert the risk that was unknown. But this month, we've seen that Fannie and Freddie Mac have started to release some of those strict guidelines. FHA and VA credit score requirement is now lowered to 600 instead of the 640, which is one example of the restriction that is easing. Number 3, larger mortgages. Higher home prices led to larger loan amounts. In March, the average mortgage taken on a new home purchase reached a record-setting $374,000, which is up from $332,000 2 years earlier, according to the Mortgage Bankers Association. As more people upsize their space during the pandemic, sales in upper price brackets outpaced ones in the lower price points. This is very unusual. In fact, applications larger than $766,000 jumped 55% year over year. Mortgages below $300,000 decreased by 2%, but that's more than likely from a lack of inventory in that price range. The 4th thing you need to look for is more non-bank lending. Borrowers have options beyond the traditional banks that are competing and gaining on the lending market share. The top banks made only 21% of the mortgage originations in 2020. It's a huge decline from their 50% market share a decade before. That's according to Business Insider's Intelligence Online Mortgage Lending Report. In fact, only 8% of our buyers use one of the top U.S. banks for their loans this year. The other 92% use mortgage brokers, local credit unions, and other avenues that provided better services, lower cost, more relaxed criteria, and higher on-time closing. And the 5th thing is locking interest rates. Aside from not being able to find a home to move into, sellers have also been hesitant in leaving behind low interest rates, especially if they recently refinanced, which we've seen a lot. This is another reason inventory continues to suffer. Mortgage rates aren't the only thing that sellers are considering. Most sellers are looking for more space or have a new sense of freedom and flexibility to work from anywhere and are selecting cities they would love to live in. That's exactly what we've been experiencing all over Florida in the last year. If you have any market questions, please feel free to give us a call at 407-801-9914.